Bernie Madoff wasn't just another Wall Street investor. He was trusted by banks, charities, celebrities, and financial elites across the world. For decades, he projected the image of absolute financial perfection. To investors, Madoff represented stability. While markets crashed and competitors struggled, his firm delivered something almost impossible: consistent profits. Madoff didn't market himself to the public. Exclusivity became the product. Access to his investment fund felt like entry into a private financial kingdom. Few people truly understood how Madoff generated returns. But on Wall Street, questioning success is often less profitable than believing in it. Real markets move unpredictably, but Madoff's numbers looked almost supernatural. Month after month, the profits barely fluctuated. Some analysts noticed something strange. The returns were too stable, too consistent, too mathematically perfect. One independent analyst repeatedly warned regulators that Madoff's operation could not be legitimate. His calculations suggested something far darker. Despite repeated warnings, regulators failed to uncover the fraud. The illusion remained protected by reputation, complexity, and institutional complacency. There were no extraordinary investments, no secret strategy. New investor money was simply being used to pay earlier investors. As confidence grew, billions flowed into the scheme. Investors believed they were participating in one of Wall Street's safest opportunities. The money came from everywhere: Europe, America, hedge funds, universities, retirement accounts. Entire fortunes became tied to one man. Behind the scenes, fake account statements created the appearance of legitimate trading activity. The paperwork became the reality investors trusted. Then came 2008. The global financial system began collapsing. Investors everywhere rushed to withdraw their money. The problem with every Ponzi scheme is simple: it survives only while new money keeps arriving. In December 2008, Bernie Madoff finally confessed to his sons. The entire operation was one giant lie. Within hours, federal agents arrived. One of the most powerful men on Wall Street was suddenly facing financial ruin and criminal charges. The revelation shocked the world. Billions of dollars had vanished inside a fraud hidden in plain sight. For thousands of victims, the consequences were devastating. Retirement savings disappeared overnight. Charities collapsed. Entire lives were financially erased. The scam succeeded because people trusted the system surrounding Madoff. Reputation replaced verification. The fund appeared selective, exclusive, difficult to access. And psychologically, people value what others cannot easily obtain. In real investing, volatility is unavoidable. But the illusion of consistency made investors feel safe. On Wall Street, success often creates immunity from suspicion. The more money someone appears to make, the less people question them. The collapse destroyed more than finances. Families fractured. Relationships collapsed under the weight of betrayal and public humiliation. In 2009, Bernie Madoff pleaded guilty to multiple federal crimes connected to the largest Ponzi scheme in history. He was sentenced to 150 years in prison, a symbolic punishment for a fraud measured not only in money, but in trust. Investigators spent years tracing vanished assets, but much of the money had never truly existed. Madoff exploited something deeper than greed. He exploited trust, status, and the human desire for certainty. When enough powerful institutions believe something is legitimate, skepticism becomes socially difficult. Some charities lost nearly everything. Programs vanished. Employees lost jobs. Communities lost support systems. The story became a global obsession because it exposed a terrifying possibility: that the financial system itself could be manipulated through perception alone. After Madoff, regulators promised reforms. Oversight increased. But financial history suggests that fraud rarely disappears forever. The greatest danger in finance is often the illusion that risk has disappeared. Modern finance depends on belief. Banks, markets, and currencies all function because people trust the system behind them. Bernie Madoff didn't invent financial deception. He simply revealed how easily trust can become the most valuable currency on Earth. And in the world of finance, the most dangerous illusion is believing that someone else has already checked the numbers.